as unfold. Moving on now, the Nigerian Exchange Limited finished the first week of 2024 on a positive note, gaining more than 2.67 trillion naira on the back of sustained investors' confidence in listed companies. The all-share index was up 6.54% to close at 79,664.66 basis points, while the market capitalization closed the week at 43.5693 trillion naira. Market analysts say the stock market was quite bullish in 2023, and the prospects of the market will improve further in 2024 as more companies approach the market for listing. What are the driving factors for the market? And to discuss this, I'm being joined by our portfolio manager. He's with AfriInvest West Africa, Mr. Babajide Atolagbe. Thank you so much, Mr. Atolagbe. It's good to have you on the program this afternoon.
Hi, good afternoon. It's good to be here.
And Happy New Year to you. I think this is the first time we're talking this year.
Yes, good to be you.
All right, before I stay totally with Nigeria, I'd like to ask you that we have crisis in our hands here: Ukraine, Israeli, Palestinian, and even Africa. Let me ask, what direct impact do you think this would have on international business and investments across the borders?
Well, what we know is that the global economy, the financial markets, and global trade doesn't gain so much traction when we have geopolitical tension across the world, right? And the Russia-Ukraine crisis is a good testament. You see that in 2022, when the war broke out, we saw like a domino effect, negative effect across different sectors of the economy. For some, they were positive, but generally it was negative. Even the financial markets saw, a drastic decline following the outbreak of the war. And in terms of how it affects the economy, we saw that the impact on oil prices skyrocketed and contributed to an economy that was already grappling with structural challenges from COVID-19, and that pushed inflation into the double-digit territory in most economies. And for example, you saw that inflation went from as low as 2% to 9.1% in 2022 following the outbreak of the war. So when we have tensions like this, it's not good for financial markets. It's not good for the economy, because it brings a lot of uncertainty, and it puts a lot of investment decisions on hold in many corners of the world. So it's not really something that we should be excited about as we speak.
Well, but I'm also seeing that CBN has finally lifted ban on crypto transactions. What do you think this means? How will this open up that space? We've had this back and forth with regards to crypto transactions in this part of the world. Now that this has happened, what does it mean for us?
Yeah, it's an interesting development. In this part of the world, we've seen that most regulators tend to halt or completely ban things that they cannot necessarily control, which is not a good approach to driving innovation in the economy. We saw the ban back then in 2021, 2022, and then a lot of crypto enthusiasts complained. Even the financial market experts and financial experts speaking on how the CBN should be more open-handed to issues like this. What it brings to us is it gives us some form of flexibility and an avenue to be innovative and to catch up with the global trend in terms of technology. Speaking largely on the blockchain technology and all the advents that are coming up, given that type of structure. So for Nigeria, it simply means that Nigeria is also open up to this innovation, and we can have our players be innovative in this sector and see how we can contribute positively to the economy. What the CBN is actually doing now is good, because what we want regulators to embrace innovation, However, they should not, embrace it to the point whereby they've forgotten or they leave out the regulatory or the regulatory oversight of this innovation. So it's an open and a welcome development. We expect, this to contribute, in terms of traction to our digital space, to technology, and also to, the deepness of our financial market.
Of confidence and risk involved is what I want to follow up with you now. Many will say the risk involved in that market is why the CBN has been trying to, so do you think that we have enough, we are ready for this? Yeah, let me put it that way. We are ready to address the challenges that will come with this.
Well, in terms of the risk, right? The risk is super high. It is one of the asset classes that has the highest volatility, right? As we speak, so we can understand when the central bank is trying to protect the interest of the shareholders, of the investors and shareholders by trying to regulate activities in the cryptocurrency space. Yes, that makes sense. But again, if we only think about the risk alone, we may completely miss out on the return, which is the opportunity that this type of technology brings, right? And prior to the ban in 2021, Nigeria alone accounted for the highest number of cryptocurrency transaction in Africa, and that's a good that's a good testament to the fact that we are progressive when it comes to digital inclusion, and also when it comes to financial market expansion. So it's an opportunity that the banking system, the insurance system, virtually all verticals in the economy can tap into if they have the right expertise, the right regulation, and then the right point of usage. So it's a combination of risk and return. The return is enormous, as we can see. We've seen what is happening in India, how cryptocurrency has skyrocketed the digital sector of the economy. So there are templates that we can take cues from and also use to develop and push the economy forward. However, we need to be conscious of the risk, and that is where the ambit of the regulators come in, by making sure that things are put into proper checks.
Well, let's move on now and talk about something else. We've been talking about this for some time now, Babajide, and you remember that's the dollar issue, and you see that disparity continues to increase one way or the other. I don't know, maybe I should ask you if this initiative or this policy of demand and supply, do you think it is working for us as a country? Because the demand for FX clearly outweighs what we have on ground. So how do we manage this?
Well, I must say that demand and supply is in the simplest and the most obvious economic term or concept that works almost anywhere in the world, right? In terms of getting price discovery, and I don't think Nigeria is an exception to that. But what we have at home is that we have limited supply due to a number of factors that I'll speak on shortly, and then we also have enormous demand, right? That is due to the fact that the economy is import dependent, and some of these demand are also tied to speculations, money laundering, and corruption. So we find out that the demand is so enormous, and the supply is somewhat constrained, and that has continued to put pressure on the currency. Over the past 3 years since since COVID-19, and so many times we've heard economists and market participants saying that we need to work on the supply part of FX in Nigeria. Yes, it's okay to do that because we have challenges from our FX FX earning spot, particularly the oil production it has been really slow over the last couple of years, and that has contributed negatively to FX accretion to the Nigerian government. Although we've seen some improvement lately, I think we're currently about 1,400,000 barrel per 1.4 million barrel per day. But historically, Nigeria used to produce as high as 1.92 million barrel per day. So if we can ramp up production materially to pre-pandemic levels, that would support FX accretion to the government. And also on the demand part, right, we also need to lay more emphasis on curbing unnecessary demand. While supply is susceptible to global happenings and some factors that are not tied to Nigeria, the demand part is largely tied to Nigeria. So that is the part where we need to also focus more on, right? In terms of our import dependency, we have to find a way to build local industries to be able to develop capacities to produce those key products that we are importing from outside the country. So we need to make sure we reduce importation on those key products. And also in terms of corruption and speculation, we understand so well that most of politicians and people who do money laundries, they all try to get as much dollar. They prefer to hide their investment in the dollar, and that has actually put more pressure on the dollar, on the demand side. So if we don't put some sort of balance to the demand side, as we begin to continue effort on the supply side, we might not find that equilibrium in the short term. So what I'm putting in that there is that we need to also focus on demand as much as we are focusing more on the supply side.
Well, back home in Nigeria, the market seems to have started this year, well, fairly well. Looking at the figures that we've seen, the market seems to be doing pretty well. But my question really would be, what do you think about investors' confidence moving forward in 2024, despite these policy challenges that we face? Because the likes of IMF and World Bank will say, that's the way to go. That's what we expect from you. Do you think this would affect Nigeria's market positively in its entirety?
Well, for the local equities market, right, I think it's important to take a retrospective approach, like look at what the performance has been, and then give a fair sense of our expectation in 2024. I mean, for 2023, it was a good year for equities generally, right? For Nigeria, it was also an impressive year because the index, the Nigerian stock market returned well above 40%, right, which is sufficiently above inflation. And when you convert it to the real return after adjusting for exchange rate devaluation, the return comes down to about 10%, which is relatively decent as well because it surpasses inflation in the US, but it lags its foreign counterpart like the S&P and in other indices in Europe. So the market performance has been relatively decent since COVID-19 in 2020. And if we look at participation in that market, it has been largely tilted towards local investors, right? So in terms of local investors' participation, that has been dominant, right? For the foreign investors, their participation has been largely muted, and this is largely connected to the FX crisis that we have been overflogging, and the illiquid state of the FX market has contributed negatively to foreign investor participation in the equities market. For 2024, right, what we are likely to see is improved sentiment. And I'm saying this because generally 2024, the investment atmosphere is tilted towards the bullish arm because we are beginning to see inflation moderate in advanced economies and some emerging market as well. And I mean, the once we see inflation moderate to a certain point, it simply means that the quantitative tightening that commenced in 2022 will definitely come to a halt, and investors central banks will begin to reassess, on cutting interest rate in the nearest future. And when you have lower interest rates, simply means the financial market is likely to enjoy some form of interest. So that is the general theme for 2024. And if that theme should crystallize, we could see the resurgence of foreign participation in Nigeria, given that risk appetite in developed markets is going to rise, and investors may begin to cherry pick attractive stocks in emerging markets. Mind you, I must say that that is not enough for participation to increase. We also need to see some form of positive development in the FX market to install confidence for investors, to guarantee them that they can bring in their money at any time and also take it out at any time.
Brilliant conversation with you as usual. I must appreciate you, Babajide Atolagbe, Portfolio Manager with AfriInvest West Africa. Thank you for your time on the program. We really do appreciate this, and have a profitable week.
Thank you, today.
All right there. Well, issues around the market. We expect